It seems like every single week I talk about Tesla being up 10% or down 10% in the recent week. So Tesla is down nearly 9% in the last 5 days. TSLY is down nearly 7% in the last 5 days. So again, it's no surprise that my fund is down, but it's only down 5.7% in the last 5 days. So what we'll do, we'll go into all the details, all the trades, all the covered calls, how much dividends I've got paid, what's my projected yield. We'll also look at the charts to see where it played out against its weekly pivot and where we think Tesla's going in the next 7 days. And all I ask for in return is that you smash that like button and don't forget to subscribe. So if we remind ourselves what we did last week, we sold a covered call at the 185 strike for $309. We managed to buy this thing back, pretty much expired worthless, with Tesla tanking to 168.47. And we picked up the full $309. I paid myself $309, even though it's $307. So we took $2 out the NAV, and we re-established that covered call at the 170 at $324, which is what we've got estimated for week 20. So that means I must have re-established my synthetic. So again, I had the 180 synthetic with Tesla again dropping to 168.47, and I couldn't put my covered call below 180. I wasn't getting enough premium there. So I decided to buy it back, took a $1,300 loss, and then re-established at the 170 mark, $2 above the current price. So where does that really net me out over here? So where this nets me out is that we've now collected over $8,000 in dividends, which works out to be $58 a day. The projected yearly dividend is just over $21,000 at a 71% yield against my original $30,000. So again, if I did reinvest dividends, that's a minus 28% loss at the moment. Without the dividends, we're 34% down. And again, we've gone through this now, the majority of the weeks for those who have been following this. The goal in this is to get the income. The goal is to get to this 21,000, and at this current rate, I will be, have the 30 grand kind of paid off, so to speak, or get my 30,000 back in a little over a year. So once that's happened, I'm basically playing with the house money, and this thing will continue to produce for me, and I can do a bit more risky things if things don't work out, to really trying to generate that income. And if we have a look at to see where Tesla is, we can see here when we had the gap up, I think this was the China announcement about full service driving. And as you can see now, it's kind of tailored back down here and now come in here to close this gap. So it's closed the gap. And again, we do have this missed pivot over here, which could be quite interesting to see what happens as the weeks go by, to see if Tesla continues to go down to hit this missed weekly pivot. We can see here that it did hit his last week's pivot. Again, this is why I love pivot points, right at the resistance mark. It kind of went there, didn't go above it, and continued to go down. So again, if we're going to continue that downtrend, what we probably are going to expect to see is a pull back up and then another leg down to potentially this pivot line. So if that happens, then we're kind of following the TA to a T. The thing we have to look out for is that we are oversold. Excuse me, we are oversold on the hourly chart. And last time here when it hit that bottom, well, to be fair, it hit it a few times in this area here, which was this kind of move just before earnings. So again, doesn't mean that it will reverse. It could just mean that we could get a slight little uptrend this week and then something down the week later, or we could get it quite early on, depending again what happens to the market. So again, we are currently again trading down. And again, if we scroll all the way back up, we started over here in December, and we've kind of been riding this kind of whatever this kind of yucky chart is at the moment. And again, the trading strategy that I'm doing, or trying to mimic the yieldmax trading strategy, it really does depend on the underlying. A lot of people have been saying to me that the strategy doesn't work. But again, if you look at something like, if I just save this, I've got this here. We look at something like Coiny, which is the yieldmax ETF for Coinbase, right? So you can see here, it's now pretty much now back to the start of where Coiny started at $20 when it initially opened. But you can see here, when Coinbase was doing really well, the price started going that way, and when Coinbase started to fall, you know, we're seeing that bit go down there. So it's basically made 5% return or 3% return since inception. Again, if you sold here at $30, then you know you'll be quite happy. But again, it has been paying monthly dividends throughout this whole process. So that is why, if you're going to go into these types of funds, you need to really be mindful of which underlying that you're trading. So again, if I look at something like yieldmax, which is basically all the ETFs that you've seen here, and again, we've seen it start at around the $20 mark. We've seen it go up, seen it spike down recently quite a lot inside the hour chart, and then come back up again. And it's trading roughly around its kind of inception price. So again, you can see here that if you want less risk of dividends, or you want to be more diversified, so if we just look at what they paid here, they paid 53, 56 and 63. So again, you really got to look at the month prior to it. So again, this was a pretty good month. So again, they're paying quite consistently. And then lastly, if you go to YMAG, which is the Magnificent Seven, so your Facebook, your Apple, your Amazons, etc., right? Again, it's roughly around the same as what it started with. It's basically flat. So if you held this at the beginning at $20, you'll be flat, but again, you'll be getting the dividends of 43 cents, 59 cents, and 62 cents. So again, this is the piece that you need to remember. It really depends on how risky you want to be with the underlying. I've gone into a very aggressive underlying in Tesla stock. As you can see here, of when we first started, I couldn't have picked the worst time to be able to do this, whereas I've picked it right here when this massive downtrend that we're currently facing at the moment. So again, this is how this kind of works. So, you know, I could do it on Coiny, I could do it on AMZ, NVD, all of these other different funds here, but I chose Tesla because at the time when I started doing this, they didn't have that many funds, and this one was paying a good yield or had the volatility, and that's what I'm trying to replicate here. So hopefully that kind of makes sense in terms of what we're doing and around the strategy. The strategy is sound in my view, but again, it really does depend. If Tesla was on a bull run from December, went all the way up to 300, you know, this portfolio will look slightly different. I probably would have made my, you know, I'll be probably over 100% projected dividend yield at this rate in 7 years' time. So again, I really hope you've enjoyed this video, a bit more insight there into other different ETFs. If you've got any questions, comment down below or drop me an email. Nice to see you guys in the next video.